The Canadian dollar is strengthening against its U.S. counterpart to kick off the trading week, with producer prices and rallying energy prices contributing to the loony's gain. It has been a sluggish beginning for the Canadian dollar, and many analysts think it could be more of the same amid tightening by the Federal Reserve. According to Statistics Canada, the Producer Price Index, PPI, advan. CED at an annualized rate of 16.1% in December, down from 17.1% in November. On a month-over-month basis, producer prices climbed 0.7% last month, up from 0.1% in the previous month. The surge in producer prices was driven by higher lumber and wood costs. This was offset by declines in energy, metals, and chemical prices. Raw material prices remained sky-high, soaring 29% year-over-year in December. But this is down from the 37.6% jump in the previous month. On a per-month basis, the Raw Materials Price Index, RPMI, tumbled 2.9%, better than the estimate of -1.3%. Raw materials were lower on falling energy and metal prices. Later this week, the Gross Domestic Product, GDP, for November and the IHS Markit Manufacturing Purchasing Managers Index, PMI, for January will be released. The January jobs report will also be published on Friday. Energy commodities were soaring across the board. March West Texas Intermediate, WTI, crude oil futures advanced $1.11, or 1.28%, to $8.793 per barrel on the New York Mercantile Exchange. March natural gas futures rallied $0.249, or 5.37%, to $4.888 per million British thermal units, BTU. Crude oil is poised for a monthly gain of 16%, while natural gas prices will end January with a 28% push. The Canadian bond market was mostly green across the board, with the benchmark 10-year yield up 0.004% to 1.763%. The one-year bill was unchanged at 1%, while the 30-year bond picked up 0.036% to 2.034%. The USD-CAD currency pair tumbled 0.53% to 1.2703, from an opening of 1.2773, at 17:31 Greenwich Mean Time on Monday. The EUR-CAD rose 0.16% to 1.4262%, from an opening of 1.4232.